Godrej Agrovet, that's a company which has declared numbers. The management, of course, is now with us. But if I just look at the stock, it's like up about 1% or so based on the numbers. The management is now with us. So thank you so much for taking out time for us, Mr. Yadav. If you could just start by Astec Life that has withdrawn the merger proposal with Godrej Agrovet. What's the reason behind this, and why particularly you've done this?
So Astec LifeSciences. We thought that we will merge this in Godrej Agrovet, but when we engaged with several stakeholders, both in Astec LifeSciences and in Godrej Agrovet Limited, we thought it will be better for the business that we wait a few more quarters, because the business has several opportunities and a few challenges which they will be best able to manage if they're a standalone company.
Right, but there were quite a few synergy benefits envisaged from this particular deal. How would you assuage analysts' concerns at this point of time?
So I'm saying that as businessmen, we would have taken that into consideration, and I can just tell you that the benefits which we see in not merging this are far more than the synergy benefits we thought we will get.
Right. What were the key reasons for the increase in animal feed segment which drove a good 10% volume growth?
So animal feed volume growth is 15% for the whole year, about 10% in the last quarter. The problem in animal feed in the first half was margins. That also got corrected in the second half. The second half margins, if you evaluate, are much better, significantly better than the first half margin. We believe that this growth story will continue. We just have to make sure that we continue to expand margins. And we are hopeful that it will happen because the animal protein prices as compared to first half of last year are much better this year.
And how are the raw material pricing trends when it comes to the segment? Are you able to pass on the higher costs?
Yeah, so raw material prices are high. If you see, the corn prices are all-time high. The soya meal prices are also rising of late, and for last 2-3 days it has shown some weakness. The cattle feed raw materials are also rising. So we believe that the inflation in raw material prices will continue. Having said that, our ability to pass through the raw material price increase is much better if the animal protein prices or the output prices are good. And today the prices of all animal protein are very good. So we believe that cost increases to a certain extent can be passed on without any problem.
Oil revenue growth was supported by increase in crude palm oil prices. What's the key trend emerging there?
So in this business, oil price is a very key variable because the payment we make to the farmers is as a percentage of oil price. So our margin in percentage terms is always ballpark constant, but definitely last year we got the benefit of high oil prices. This year the oil prices are subdued. There is almost a 7-8% drop in palm oil price in last few weeks. Of course, we believe, considering the global demand and how it is a little volatile, we believe that these prices are likely to rise in coming weeks. That's what all the people who forecast oil prices also are forecasting.
Also, could you give us some kind of a guidance for the various businesses and segments for this fiscal FY20?
Yeah, so I'll keep it very short without giving any future guidance. I will just say that the kind of challenges we saw in the first half of last year, those challenges we do not see this year. So we believe the performance will be better. Having said that, the only thing we would like to watch is onset of monsoon, because that is very critical.
Thank you so much, sir, for taking out time for us and telling us about your numbers.